Hello, everyone. This is Matthew Frailey, founder of BreakpointTrades.com. First off, hope you all had a nice time watching the Super Bowl. As you know, the Chiefs won. It was a very close game. Anyway, I just did an extensive newsletter video on Super Bowl Sunday. I wasn't planning on doing a YouTube video again tonight, but I figured I'd just go ahead and quickly go through things, show you what transpired. Okay, so let's go and get started here. Here's our back-end recorder for tonight's newsletter, and let's get this started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, February 12th newsletter. First off, I hope everyone had a nice weekend, watched the Super Bowl, etc. It was a very close game. It was a good game if you're into that. And as you know, I had an extensive newsletter on the weekend. Hopefully you looked at that. I put it out well before the Super Bowl, so you had plenty of time to peruse it, or even today, this morning. Anyway, as far as the market, so I'm going to try to keep this newsletter briefer, get through this pretty quickly. As far as the market today, it was a bifurcation day. What I mean by that is the Dow Jones and the Russell 2000 were up, especially the Russell. The Russell was up 1.8%, so it trounced the other indexes. It's been playing catch up, as I suggested that it might do. So while the Dow and Russell were up, the S&P 500 and NASDAQ were down, so that's a bifurcation. Now, earlier in the day, the S&P 500 was actually up very nicely. It was up almost 30 points, but then it formed a little intraday double top, sold off into the afternoon, and closed slightly down. Okay. One thing that had a great day, these crypto mining stocks continue to have huge moves. Mara, MSTR, Hive, Coin. And remember, the KISS systems caught a lot of these and have massive gains. And I'll show you those later on. Gold miners, remember I said they were at critical support. I was showing the weekly GDX chart was right at that lower coil trend line. I said it was do or die, needed to bounce. Well, it bounced today. So gold bugs are trying to defend it. Though I do think a lot of gold bugs, the majority converted to crypto nuts. Anyway, but one day doesn't make a trend. We'll see if it can build on that or if it's just a one-day wonder. All right. And again, I already discussed a lot of these things over the weekend, how the market's been climbing a wall of worry. But I do think, guys, we are getting closer to some kind of high here. The risk reward to the long side, especially new longs, is not good at this point. Okay, market's quite overbought, quite extended. It's had one hell of a run, so be careful out there. So make sure to have a plan in place. If you have a ton of longs, you don't want to sell, maybe it's time to look at some hedging, such as SQQQ or SPXU. KISS systems, of course, will keep you protected because they have those smart trailing stops. So again, make sure you have a plan of some sort. For this week, tomorrow, the big news is CPI, core PPI. So the market will obviously react to that. Let's see how the market responds to that. And let's go ahead and get started here. Get through this quickly. So item number 2 shows the index sector table, what transpired today. So again, you can see the bifurcation there. S&P and NASDAQ down, Dow and Russell up, especially the Russell really playing some much needed catch up to the other indexes. As far as the 21 market sectors, didn't fare too bad today. Most were up, albeit most of the gains were fairly small. I don't see anything over 2% here. So otherwise, fairly small losses, fairly small gains. Currency-wise, US dollar bounced back a little bit, up 0.1%. Crypto, again, remains strong, up 3.25%. Bitcoin was today, but what really has been powering are the crypto stocks. Some of the old ones like Mara, MSTR, Hive, stuff like that, Coinbase. Commodities, you can see the index was just slightly positive, 0.04%. Crude oil up 0.1%, so pretty benign day. Natural gas is just absolutely taking it to the woodshed, down another 4.3%. You know, it may be approaching its 28-year low. I have a monthly chart that I'll show again tonight. Again, fairly small moves in most of these. Coffee had a big bounce today. Precious metals, gold was slightly down, but the stocks were up and silver was up. So GDX, the miners, they bounced where they needed to right off that support, but we need to see it build from there. And as far as the bond market, 10-year, 30-year slightly down today. Next. Item number 3 shows the economic news calendar. As I already stated, Tuesday, tomorrow morning, the CPI, core PPI, inflation data is the big news. We'll see how the market reacts to that. And before we get into the general market, again, I just want to keep covering these KISS systems. So if you're a subscriber and you haven't set up your favorites, do so. Go to the KISS systems section, go to the KISS STS tables, come here, set some favorites by clicking on those stars on that are next to each stock. Again, you can find the favorites you want in the baskets. You can search from the search box. By the way, we reordered the columns here. I think they make a little more sense. So you have symbol, chart. So when you click on these, you get a live dynamic chart. You have the news. This brings you to Yahoo Finance. The status here, whether there's a new smart trailing stop or long or flat, entry price, previous STS, current STS, STS date, number of STSs and trend, percent away from STS. So I think everything's ordered a little bit better here. Again, massive gains in a lot of these. And again, set some favorites. You got to check that box to receive email notifications to your email inbox. If you don't do that, you won't receive those. And if you're looking at this on YouTube, that's a reason to become a subscriber so you can follow these amazing systems. Next, image number 5. Here's an example of what your alerts will look like in your emails. This is from my Gmail account. So the titles come STS KISS Systems Update from Breakpoint Trades. You get these nice clean tables whenever you have a change to one of your favorites, such as a new entry or new stop, whatever. And all emails are coming from support@breakpointtrades.com. So if you haven't done so, definitely maybe make a folder, have that email address forced to go to that folder, white label our email so that you're not, it's not going to spam, something like that. Next, image number 6. Here's an example of one of the KISS systems. This is UPRO. That's the leveraged DTF for the S&P. Went long back here, early November. Trades up 47%. Amazing trade. You can see the progression of the smart trailing stops. The charts have a lot of useful information on here. You can see the A's showing up. That's a little warning, short term. Again, systems have done a fantastic job about catching this trending move, which is what they were designed to do. And the thing, again, I know this slide may be a little corny, but KISS systems, you can kind of think of it like life insurance for your portfolio, okay? Again, I know it's corny, but the thing is when the market is just trending up and up like it has been, people get what's the word? They're not worried about risk. And, they're happy-go-lucky, times are good, but you always need some sort of insurance. Just like, if you're 30 years old and you're healthy, you have a family, you still have life insurance because it's the right thing to do. Something could happen. It's the same thing. You never know when something can happen. The rug could get pulled out of the market. So you always want that protection. That's what the KISS systems are for. They'll keep you in the trend, but with an exit plan. Okay. The folks who don't have exit plans are the ones who ride the market up like it is now, and they ride it all the way down. Back to the general market. Here's the daily chart of the 5 major indexes: Dow, S&P, NASDAQ, Russell. Again, you can see today we got some spinning top doji candlesticks, especially on the S&P and NASDAQ. So little short-term warnings here. Next. Chart 9, here's the Dow Jones. Again, it was up today along with the Russell. Remember, we have this divergence that's been building for quite a while on the MACD and RSI. So again, remember, new longs up in here are definitely higher risk. Not a lot of blood in the turnip, I think, is the other statement. Can't squeeze much more out of it. So, just realize it could continue drifting higher, but eventually we're going to get a nice correction here. Next, chart 10, here's the weekly view of the S&P. Again, this is just Monday, but you can see so far it's struggling a little bit at this upper resistance trend line. Next, chart 11, here's the daily view. Remember on the weekend I showed this tight rising wedge. You could see today's rally, where did it stall at? right at the top of that trend line that I had in place. I have not adjusted this trend line. So stopped right there. That was an excellent place for price to pull back. You can see the RSI divergence. You can see the MACD divergence. So everything is set up here, maybe at least for a pullback down to this uptrend line of this steep wedge. Now, the comments here, you need a pullback larger than 112 points to break the uptrend symmetry from the October lows. Okay, it doesn't mean you have to wait to short or exit longs before that, till that happens. But if you get a trigger, you can take trades earlier. But that's what's needed to really confirm the end of the uptrend. Next. Feb 12th, here's the zoomed in daily view. Again, look at that ugly candle today. Not a black candle, but little spinning top doji. So short-term little warning. Remember, CPI is on Tuesday, so it could gap either way on that. Feb 13th, here's the KISS Trend System. So again, no new changes. Smart trailing stop still 48.18, 48.20. So again, you are protected, but that is quite a way still from current price. Feb 14, here's the 4 time frames. So nothing, no real changes here. The ATR is still support on all these time frames, but look at all these A's showing up. We'll DeMark 13 here on the 130 minute where we pulled back from. DeMark 9 on the 78 minute. So little short-term warnings here just to be cautious. Feb 15, here's a half-day chart just showing this little channel we've been showing. Remember, we've been looking for this 5th wave high, which we got, but the fact that we're in the 5th wave, it could end any time. So just realize that this is kind of the final move here, perhaps, before we get some sort of pullback. Feb 16, here's a 60-minute chart just showing that same clean channel. No changes, obviously, with that. Feb 17, here's the 30-minute chart showing that same channel. Remember, I showed the divergence on the weekend. So we got a little pullback in that channel so far. And finally, chart number 18, here's a 15-minute chart. Nice little thing of beauty. We had that little coil mid last week, which busted out. Here, the largest pullback since the February 1st lows. So from this low here, the largest pullback was right here on February 5th. February 2nd to February 5th. So to break the symmetry just from the February 1st low, you would need to fall below, well, back below 5,000. So that's kind of a marker to monitor. Feb 19, here's the weekly view of the Qs. Again, just showing that longer term wave count, that 1, 2, 1, 2 that we've been following. We've been working on this wave 5 of 3. Once complete, I'm expecting a deeper wave 4 pullback. Wave 5 could end right in here or this week or 2 weeks from now, but eventually I expect this to end. Obviously, again, we're quite stretched here. Look how wide the moving average ribbon is now. The times of low risk, or when it's tight, it's too wide, you get some mean reversion action. Feb 20, here's the daily triple Qs, again, in the same channel. No changes. We do have a little divergence up here to be aware of. Short-term support are these little fast-moving averages. Longer-term support is the channel uptrend line and the 20-day moving average. Feb 21, here's the half-day chart. Again, little pullback here. We have a pretty pronounced MACD divergence to be aware of. Feb 22, here's a 60-minute chart showing this wave count. So one thing I'm wondering here, so this is clearly the wave 5 in here. Is this a wave 1, 2? Get a little ABC consolidation. And this is maybe a 3. So if that's the case, what we may see here is this would be a little wave 4 pullback. Then we get one more move up in a 5 and then complete. Something to consider. Because right now this looks more like a wave 3 high. Okay. But again, even if we get that other push up, guys, you can see there's not a lot of meat on the bone. That's my point. Next. Feb 23, here's the daily KISS system for the Qs. Again, no changes. Smart trailing stop, so 4/12/30. Next. Feb 24, here's the 4 time frames. Again, just like on the S&P, got a bunch of A's up here. You got DeMark 13 on the 78 minute, DeMark 9 on the 130 minute. So little short-term warnings. Again, maybe short-term is a little minor 4 pullback. Next, chart 25, here's SQQQ. So again, because the market's getting closer, I think, to some sort of high, it's time to at least start considering some of these hedges. So here's the triple inverse Qs. It's been wedging here, as I showed. You have some MACD divergence, some RSI divergence. Again, it still has room to wiggle around within this coil, but it is starting to look interesting. Also, guys, if you have a bunch of longs that you don't want to sell for some reason, but maybe you want to hedge them, that's what these are for. It's not the time to go full bore short on the market. Nothing's changed with the trend, but it could be time to start hedging some existing longs for protection. In chart 26, here's the SPXU. Now this is a 60-minute chart, but I showed this on the weekend. It did bounce today, clearing this one little trend line. Next, chart 27, IWM small caps, big day, again up 1.8%, breaking this kind of coil-like pattern. And my guess is this is some sort of wave 4, and then it's now in a wave 5. Remember, the Russell was lagging the other indexes, and I said it would likely play some catch-up, and that's what it's trying to do. Chart 28, here's the 60-minute chart. Again, nice clean break out of that coil. Looks like at least an easy target at those last highs. And chart 29, the monthly view. Big resistance up there at 205.50. All right, guys, that does it for the indexes. I'm going to keep it short and sweet. Let's move on. So chart 30, here's the VIX. The VIX closed up nicely today. By the way, the VIX was up today while the S&P was up. So it was given a little early warning. But nice move in the VIX. Chart 31, here's the NYSI. Again, we continue to monitor some of these divergences and these breadth indicators like this. Again, we don't have a trigger for a sell at the moment, but you have the divergence. And I think it will end up holding until the market does pull back. Chart 32, following up on some of the sectors. Here's transports, pulling back a little bit today. Chart 33, here's XLK technology, little pullback. Remember that bull flag played out, but that last high you had a MACD divergence, RSI divergence. So again, we haven't broken any even short-term supports, just pointing out the little divergence. Chart 34, financials, they continue to hold up well, up another 0.5% today. Chart 35, banks, also up nicely. They bounced off the lower trend line of that pattern, holding up okay. Chart 36, retail continues to power higher, took out that recent high. Nice move out of that little consolidation pattern. Chart 37, consumer staples. Remember, this was weakening. Notice it bounced right off that trend line there. That broken trend line was support. Chart 38, biotech. Remember, I pointed this one out on the weekend. Nice follow through. As the small caps are going up, this should participate with them. A lot of the biotech are loaded into the Russell 2000. Looking at the energy sector, here's XLE. Remember, last Friday, price was rejected off that downtrend line. Little bounce back today. You got a lower high here, just from the low 82s. Ideally, if price can hold that, that would be good. That's your kind of critical support right now. Chart 40, here's oil services, bounce back. But again, overall, the pattern, it's in this downtrend channel, really needs to break out of the channel. Chart 41, ExxonMobil, the one that we've had as a long since January off those dojis, had a nice pop. It was a good price to take some profits. I got a stop on my remaining position right there at that higher low, right around 105.50. And chart 42, here's XOP, S&P, oil and gas exploration. This is a monthly chart, so each candlestick is 1 month. And if you look here, you got a 2-year coil forming, really pretty. And in fact, if you count all the way back here to 2016, you have what looks like kind of a big, monthly inverse head and shoulder pattern. You see that? I mean, if this were to play out eventually, you could be looking at a mammoth move up for one hell of a good swing trade that you can hold for a couple of years. But remember, this is a monthly chart. Each candlestick is 1 month. That means this thing could chop around in here for months before finally breaking out. But it's one to watch, keep an eye on over time. One of our astute members posted this. Next, chart number 43, BP&ER. I showed this on the weekend. It did move up a little bit today, slightly going over that 20 MA trigger. And chart number 44, the China ETF. Remember I discussed these on the weekend. This bounced as well. You got a couple higher lows here that could be stops if you're long. I do like the volume patterns here. China has been absolutely in the toilet, but we'll see if this can build or not. Moving on, the bonds, chart number 45, high yield corporate pulling back, still in this coil pattern. Remember, bonds have failed. The high yield corporate has failed to make a new high with the S&P. Chart number 46, there's the S&P with high yield corporate. Again, you can see that big old divergence I've been talking about for the last month and a half. Still there. Chart number 47, 10 TLT 20-year bonds still hanging around this area, little support area. And chart number 48, here's the 10-year treasury yield, was just slightly down today. Remains to be seen if we get another pop up here like I show in wave C or not. CPI is likely to have an effect on this and the US dollar tomorrow morning. Moving to commodities, here's DBC up just a tad today. Very benign move. Chart number 50, crude oil also up just a tad, 0.1%, no changes. Chart number 51, natural gas, UNG, just absolutely taken to the woodshed. Down 5.7% today, just melting down. And here's the monthly chart I was commenting on. This chart goes back 28 years, back to 1995 when I was in college. You can see the long-term support demand zone, and it looks like price may be heading to that area, down in the ones, 1.5 area. Crazy. Again, natural gas is not something you should ever hold for the long term. It is a trading instrument, and it is a very tough trading instrument. They call it the widowmaker for good reason. Next, chart number 53, copper bouncing back a little bit after that pretty good recent sell-off on that possible head and shoulder top. Chart number 54, DBA pulling back a little bit. That's the agriculture ETF, but it's been a heck of a run from that pattern break. So, wouldn't blame you if you've taken some profits already. Chart number 55, here's the weekly, this potential big cup and handle. Crypto, chart number 56, Bitcoin, again, took out those recent highs. This area has been super strong. Again, I think most of the gold bugs used to be in gold are all crypto nuts now. We got a few on our blog. Digi, one of them. Ethereum, ETF, we've had this on the list since last week. One heck of a move, though fairly small move compared to some of the stocks. Let's take a look at those. Here's MSTR. Look at these power moves, up 11% today. Massive move from that 528 breakout. Look at the volume. Look at the move here. Chart number 59, Mara, up 14% today. Look at these moves. I pointed out the demand zone, the ABC. Hopefully some of you went long back here. I think the KISS system went long back here. Then you had a higher low wedge, and it's just been powering up ever since. Chart number 60, here's the KISS system right on the website, Mara. It went long on, where is it? January 25th at a price of $17.23. Trade is up 58% and went long right here at that vertical line. So this has been live on the website. I pray that some of you bought that puppy. Next, chart number 81, Hive. Again, moving up as well. Little kind of a bullish W bottom look there. Rallied right off that long-term demand zone. And finally, chart number 62, Coinbase, Kathy Wood's favorite, up as well nicely. Hope some of you guys caught those crypto stocks. Let's go ahead and move on. Chart number 63, US dollar, bounced, pulled back off the 61.8 fib last week, bouncing a little bit today. Chart number 64, gold. Again, remember I showed on the weekend that maybe forming a coil-like pattern here, slightly down today. Chart number 65, here's the other daily version of gold. This one has the ratio. The stocks outperformed today, but again, you need more than a day, guys. Chart number 66, silver, up 8% today. Otherwise, again, it's just been ping-ponging for the last year and a half within this large pattern. Jumper 67, GDX, gold miners. I said this was critical support at the lower trend line of this coil. So it bounced off of here. Gold bugs, what's left, are trying to defend it, but again, they need to build upon that. Jumper 68, GDX in the daily. Again, remember, we filled that open gap. We are bouncing, but again, there's a lot of resistance overhead. You know, the gold bugs need to show us that this is not just a one-day wonder bounce. Jumper 69, GDX in the 2-hour view. Again, you can see it bounced right off after that gap was filled. The ratio curled up a little bit. Jumper 70, BPGDM, again, no changes here. I just want to point out it's at 25%. It's not in the deeply oversold territory, but it has come down. We've had awesome buy and sell signals on this Renko chart. Very clean. Okay, let's go and move on to the trade ideas. Jumper 71, ARM. Boy, this thing just continues to power. Boom, boom, boom the last 3 days. Look at the volume on that puppy. Man, over 100 million shares traded today. The average was down around, used to be around 10 million or so. Just crazy. Jumper 72, NVIDIA, up and away, but little indecision doji here today. Again, it's had one hell of a run. Jumper 73, Microsoft pulling back. There is some RSI divergence up here to be aware of. Remember, check to see where the KISS system has a stop. It's been long as well. Jumper 74, ESEA. This is a short idea from Steve last Thursday. Moved down on Friday, sold down today. Awesome if you shorted this on Friday. Congrats. Look at that volume pickup. Make sure to be taking some profits, especially around that 50-day moving average. That's the support zone. Jumper 75, ABUS. Boom, powered again. Long idea of mine from last week. Look at that nice move. Very good percentage move. Jumper 76, MHK, Mohawk Industries. Nice breakout. This has been on the watch list as well. Jumper 77, Lennar. It's a home builder. Busted out today. Look at that move. It's been on the watch list for a week. Nice, had nice clean resistance at 155.50. Nice clean break. Jumper 78, URI broke out as well, but came off those highs. You know, at least for a day trade, it gave you a pretty good pop. But as I stated, I'm not looking at this as a big swing trade. It's had a heck of a move. You have a bunch of gaps in here. So this is one more just for a trade. Jumper 79, DOCN, was been on the watch list. Had a nice move last week out of the coil. Little inside day today. Jumper 80, AMPH, nice move off the 200-day moving average. Remember, that's where we had it long. Been a nice trade percentage-wise. Jumper 81, UWMC, another one from last Thursday. Nice coil break. Off the highs, though, today. Jumper 82, NVEI, one from, it's been on the watch list for a couple weeks now. Little pullback today, but it's fine. So far, you have a nice profitable trade. Jumper 83, ALPN. Remember, I added this as a bull flag last week. Nice move. I'm not longer in this thing, but it's been a nice trade. And we had it as a trade back here in January, so twice in a row. Jumper 84, ON Superconductors. Remember, I put that out as a breakaway gap over a week ago here. And if you bought that, it's had a nice move since. Jumper 85, Roku. This rounded bottom I showed last week. Hasn't been powering out of here, but it is profitable now if you bought that resistance break. Have a stop in place now. Jumper 86, Burlington Stores, still holding up in here. It needs to really hold in here. I think at this point you could have a pretty tight stop, maybe below these moving averages. Jumper 87, True, TransUnion, has not taken out resistance, but this is a really pretty chart, ascending triangle. I'm long already. I'm going to add if it breaks resistance. I got to stop in place in my current position. Jumper 88, FAMI. Here's a little low-priced one. What stood out was the base and the volume. I know nothing about it, but, maybe you get a follow-through. And Charber 89, OTLY, another low-priced one that broke out on pretty good volume. We'll see if these can follow through, guys. And again, remember, it's time to also start looking at some of those hedging things, such as some of the inverse ETFs. While we still may have a little more to go in the market here, we are getting very long in the tooth. Okay, have a good evening. Thank you for your support. Take care.